What's up guys, my name is Nick, and in this video we're going to figure out if investing in Starbucks stock is the right decision for you and your portfolio right now. If you guys have been paying attention to Starbucks stock the last few days, it's seen its stock upgrade to a buy by some analysts, and it's also seen its stock price rise pretty significantly over the same period. And this video is really in response to all that, since I know a lot of you may be wondering whether this is a good time to jump into Starbucks stock. And to do that, we're going to be performing an in-depth analysis of Starbucks' fundamentals and quarterly performance, as well as the opportunities and risks associated with purchasing Starbucks stock now, so that you can make the best decision that you can and be as informed as possible. And before we begin, this channel aims to provide daily investment insights to help you all make better informed investment decisions. And I ask that you subscribe down below if you're interested in more of this type of content. Now, let's get into the video. To start off, we're going to look at Starbucks' stock performance year to date. And the most notable thing that stands out is that Starbucks is actually down year to date. In contrast with a NASDAQ, which is the index it's a part of, reaching record highs over the previous weeks, Starbucks is actually lower today in terms of price than it was at the beginning of the year, which means that Starbucks is underperforming the NASDAQ as a whole. And a main reason why this is happening is that Starbucks uniquely relies on foot traffic to its physical locations for a large chunk of its revenue. And with many of its stores being closed or limited in some capacity over the previous months, its revenue has taken a hit and thus its stock has not recovered to the same extent as many of its competitors. However, at this point, basically all of its stores are open, so that's not as big of a factor anymore. And to give a quick rundown on how the stocks performed over the course of the year, it started at about $90 per Starbucks share in early January and reached a high of about $93 per share in late January. As news started coming out of China and they had to start limiting or closing some of their stores temporarily, it sent the stock tumbling down in late January and early February, before taking a serious dive down as the rest of the market bottomed out in mid-March. Since then, the stock has slowly recovered and has basically been oscillating between $70 and $80 per share since May, until some recent upwards movement, which we'll get to in a second. And now looking at the previous 5 days, we see the stock has surged from around $77 per share to over $83 per share, which is roughly a 15% increase in the stock valuation in just a 4 to 5 day period. So how did Starbucks break out of that $70 to $80 price range we've been talking about and reach these new highs? Well, there's three main reasons. Firstly, there have been positive vaccine and treatment developments over the previous days, which have made investors more confident that more people will be able to travel or be more comfortable going out, which will lead to more foot traffic into Starbucks stores in airports, in cities, and everywhere else they're located, which will help boost their revenue. As we mentioned earlier, Starbucks really relies on foot traffic and especially traveling to generate a lot of their revenue. So any positive developments in those domains will seemingly lead to an increase in the stock, or at least lead to more optimism for the company, because this will mean that their next earning reports will be better. The next reason is that a Stifel analyst put a buy on Starbucks stock and also raised their price target to $90, which means they think that Starbucks stock could reach $90 per share fairly quickly, and this led to a lot of talk among investors and also people investing in Starbucks stock raising its price. And the third reason is that Starbucks is coming out with their pumpkin spice latte earlier than usual this year, and this is an item that they've been coming out with for 17 years and is extremely popular. And because of this, many anticipate that Starbucks will see a sales boost that will help them recover some of their losses from the previous year. Now that we have a better understanding of the history of Starbucks stock and what caused many of these major movements over the previous year, let's actually take a deeper dive into the fundamentals of Starbucks as a company, starting with their company profile, so that we can better understand Starbucks' mission, culture, products, and how they generate revenue, which will give you, the investor, a better idea if this is a company that you would actually want to invest in. To begin, Starbucks has over 30,000 stores across 80 markets around the world as of June 30th of 2019, with the majority of those stores being in the United States and around 4,000 of those stores being in China. While Starbucks continues to be a very US-centered company with the majority of their stores in the United States, Starbucks aims to grow their presence in Asia and especially China by thousands of stores in the coming years to increase their presence in the ever-growing Asian economy. For Starbucks' products, Starbucks describes themselves as offering a range of exceptional products that customers enjoy in our stores, at home, and on the go. In their stores, they offer coffee, handcrafted beverages, fresh food, as well as merchandise including coffee and tea brewing equipment, mugs and accessories, packaged goods, and books and gifts. And they also offer products in places where groceries are sold, including coffee and tea and ready-to-drink options. Starbucks also has multiple brands under its overall brand portfolio, including Starbucks Coffee, Seattle's Best Coffee, Teavana, Evolution Fresh, Ethos Water, and Italia Coffee. And Starbucks sells these products through multiple channels, with the first and most significant channel being through their 30,000 physical locations around the world, which includes ordering your coffee or food items in person at a given store, or using their mobile app to order and pay ahead. And due to recent events, Starbucks is also expanding their drive-through and delivery services at given stores. Starbucks' second revenue channel is selling their products through other retailers, such as grocery stores or convenience stores. And their third revenue channel is through their online store. Well, actually, that one's not true, because as of 2017, Starbucks shuttered their online stores to simplify their sales channels, which means that they basically only make money either through selling through their stores or through selling through other retailers. And this strategy has backfired on Starbucks in recent months as travel and store opening restrictions have been put in place, and people overall have been a lot more weary to go out unless it's absolutely necessary. And as a result, Starbucks has seen their revenue greatly drop over the previous months. However, their growth strategy makes a lot more sense when you take into perspective their mission and value statement, which I'll read right now. Starbucks' mission is to inspire and nurture the human spirit, one person, one cup, and one neighborhood at a time. And their values include, with our partners, our coffee, and our customers at our core, we live these values, creating a culture of warmth and belonging where everyone is welcome, acting with courage, challenging the status quo, and finding new ways to grow our company and each other, being present, connecting with transparency, dignity, and respect, and delivering our very best in all we do, holding ourselves accountable for results, saying that we are performance driven through the lens of humanity. Starbucks' growth strategy and where the company feels they have their advantage is through creating a great customer experience that makes the customer want to come back to a Starbucks store. And this is the reason that they've chose to focus more in person than online, because you can't create that great customer experience online. Next, let's look at Starbucks' Quarter 3 of 2020 Fiscal Results Report, released on July 28th, which is the most up-to-date snapshot on how Starbucks is performing as a company. And at the beginning of the report, Kevin Johnson, Starbucks' CEO, noted that we are pleased to share that the vast majority of Starbucks' stores around the world have reopened, and our global business is steadily recovering, demonstrating the relevance of the Starbucks brand and the trust we have built with our customers. As we continue to drive the recovery, we are also building resilience for the future by accelerating the transformation of our business in a way that will elevate the customer and partner experience and drive long-term growth. We firmly believe that we are well positioned to regain the positive business momentum we had before. And while the CEO was very optimistic about the future, the quarter 3 numbers were very bleak. Notably, Starbucks' net revenues of $4.2 billion was 38% less than a year prior, and they also lost sales of approximately $3.1 billion relative to what they expected. Additionally, Starbucks' global store sales declined by 40%, driven by a 51% decrease in transactions. But what I thought was very fascinating and optimistic for the future of Starbucks was that this decline in transactions was partially offset by a 23% increase in the average ticket from the year prior, which means that the average person was spending 23% more per purchase than just a year ago. Which means that if Starbucks is able to regain its lost traffic, it will become even more profitable than before, because it's able to generate more revenue for the same amount of traffic. However, as Starbucks does regain this traffic, I would expect this 23% figure to go down to some extent, since a lot of the people that are going to Starbucks consistently now and making the purchases are probably more dedicated customers and thus spend more. And this will become diluted as more of the general population begins going to Starbucks again. In terms of store growth, Starbucks opened 130 net new stores in quarter 3, ending the period with 32,180 stores globally, with 15,243 stores in the United States and 4,447 stores in China. And although this was a growth in net new stores, it is still less than last quarter, which opened around 360 new stores. So while quarter 3 was fairly bleak for Starbucks overall, there still were some silver linings that we pointed out. And additionally, Starbucks expects things to get better for them in quarter 4 and beyond as things get a bit back to normal and we push closer to a vaccine. And additionally, as Starbucks is given more time to adapt to the new circumstances. And now we're going to hop over to Yahoo Finance to look at the current financial data on Starbucks stock as of the time I'm posting this video. The current price of one share of Starbucks stock is currently just under $84 per share, which means that you need to pay $84 for one share of Starbucks stock. Starbucks' market cap is roughly $97.5 billion, which means the total amount of shares being traded totals up to being worth $97.5 billion. And for perspective, McDonald's stock has a market cap of about $150 billion, which means the value of Starbucks is currently about 2/3 of the value of McDonald's. Starbucks stock has a beta value of 0.79, and the beta value tells you how volatile the price of a stock tends to be over time. Since Starbucks has a beta value of less than 1, it means that investing in Starbucks is considered a lower risk, lower reward type of investment. Starbucks' EPS, or earnings per share, is $1.13 per share, which is calculated by dividing Starbucks' total profit divided by its total number of outstanding shares of stock. And an EPS of $1.13 is rather low. But as we previously covered, this value has been skewed lower by Starbucks' disastrous quarter 3 earnings report. Additionally, Starbucks' PE ratio, or price to earnings ratio, is 74.08, and this is calculated by dividing Starbucks' current share price divided by its EPS. And a PE ratio of 74 is rather high for a company like Starbucks. A higher PE ratio means that investors are willing to spend more money because they see more growth potential in the future for a company. Starbucks is already an established company, and it doesn't have plans to grow massively or greatly increase its revenue in the near future, besides rebounding from its lows back to what it was already at. So a PE ratio of 74 does make the stock seem like it is overbought. However, you have to consider also that the PE ratio is a bit artificially inflated due to the $3 billion less revenue that Starbucks generated than they were expecting last quarter, and that as Starbucks recovers, the PE ratio will start to lower, assuming the price of Starbucks stock does not massively increase in the meantime. And Starbucks also has a dividend of 1.99%, which is just about average for NASDAQ stocks. So now that we've covered the fundamentals of Starbucks stock, the question becomes, is it a buy at this point? And ultimately, that is something that you will need to decide for yourself based on your own investing goals. But I will tell you my thoughts on the stock, including the potential upsides and downsides of purchasing the stock at this point. I will start first with the upsides. Starbucks, based on their updated guidance, expects to begin recovering and have a better quarter 4 than they did in quarter 3. Additionally, globally, 90+% of Starbucks stores are open, except for many in universities and airports, which with the beginning of fall semester for universities, may see many of these stores open by the end of the year. Starbucks also seems to be doing a lot to adapt their stores to these changing times. They are expanding their access to drive-through, takeout, and deliveries to increase sales. They are also trying to expand their app users and those using their loyalty program to improve customer convenience and customer loyalty. All these advancements point to Starbucks performing better for the remainder of 2020. However, a lot of the change in Starbucks stock price will not be based on the actions of Starbucks. If more positive news continues to come out regarding vaccines, treatments, and airline disinfectants without any more major setbacks, then the value of Starbucks stock will likely go up as investors become more optimistic about Starbucks regaining a lot of their foot traffic and traffic from travel back, and thus boosting their sales. And the downsides really have to do with Starbucks' business model, which was the in-person customer experience. Yes, Starbucks is trying to adapt by expanding drive-through, takeout, and deliveries, but this will not be an instant change and it will not be available at all locations. If Starbucks is unable to regain a significant chunk of their lost traffic from their stores, then the company will have a hard time over the next few years. And currently the assumption is that as more positive news comes out around vaccines and treatments, that more people will go back to their old behavior. But it's also possible that a significant chunk of former Starbucks customers have gotten used to making coffee at home and will not be purchasing from Starbucks anymore. Additionally, while most of the news around vaccines and treatments has been positive recently and has helped push the stock higher, bad news could easily send the stock right back down. Overall, Starbucks stock seems to have a moderate upside and a low to moderate downside for the rest of 2020, and the performance of the stock until its next earnings report will be mainly based on sentiment around vaccines, treatments, and the future of travel rather than on the company itself. Thank you for watching. Don't forget to like and subscribe, and have a great day.